Hi everybody, it's Terry Ryder from Hotspotting. It's that time of the week when every week I discuss the week in real estate, the weekly newsletter that we distribute to our mailing list of subscribers on a Saturday morning. And in each week we highlight what we see as the 5 major stories around the Australian real estate market throughout the week. One of the stories we're highlighting this week is one that portrays a trend that we've picked up on quite strongly in some of the markets, particularly in the eastern states this year and coming into 2018. And this story highlights what they call Townies going bush for a tree change, and the likelihood that their buying interest is going to push up property values in hill change locations not far from some of our capital cities. This story suggests that technological improvements are allowing people increasingly to run their businesses pretty much from anywhere, so they don't need to be in capital cities. And those who find that the pace of life is perhaps a bit hectic in the capital cities, the cost of living is too high, can move to a country location, have a more relaxed lifestyle, access good real estate for much cheaper prices and run their businesses from there. And it's suggested by a report from Rain and Horn that this is going to drive prices higher in some of those near city tree change locations. We've actually seen that happening, and particularly in locations close to Melbourne recently. Melbourne's been through 3 years of high price growth. The growth started in the inner city suburbs. It rippled out to the middle ring and then to the outer ring, and now we're seeing some pretty strong growth in some of the country towns just outside of Melbourne, a little bit north of Melbourne in some cases, and down in the far south east, towns like Pakenham and Officer just outside the Melbourne metropolitan area down in the southeast. Big increase in sales activity and prices in some of those locations. Another story that we feature in this week's edition of The Week in Real Estate, or The Wire for short, is that the Australian economy is growing strongly, and it is rated very highly internationally. A UK think tank called the Centre for Economics and Business Research has forecast that in the next few years Australia will rise from being the 13th largest economy in the world to the 11th largest. And it feels that this is primarily driven by the higher than average population growth that Australia is receiving, primarily through strong high levels of overseas migration. Another story that we feature this week is the federal government highlighting the new scheme whereby first-time buyers are able to save by contributing more to super, where the taxes are lower. So there's a tax cut in effect if you save for a first home in that method, and that you can withdraw those extra contributions you make to super from July 1 this year and use that to help provide a deposit to get into a first home. I think the scheme seems to be rather dependent on people having lots of spare cash to put into super. It says that individuals can put in $15,000 a year, or a total of $30,000 over 2 years, or couples can put in a total of $60,000 into their super and save for a first home deposit that way. I think the scheme kind of assumes that young people have a lot of extra cash to put those lumps of money into super, and I seriously doubt that. Another scheme that's been put forward to help young people get into homes easier is being promoted by the Property Council of Australia, which highlights a scheme that's been running in Western Australia called Keystart, which apparently allows young people to buy a first home on a 2% deposit in Perth. And it seems that up to about 3/4 of Keystart approvals under this scheme are for people building new homes. So not only does it help young people get into homes with a smaller deposit, therefore easier, but it's also promoting the construction of new homes in Western Australia. And it's recommended by the Property Council of Australia that that scheme be extended nationwide as a good way to helping people into a first home. There's also a story, some statistics out from one of the larger mortgage broker networks, Australian Financial Group, which allegedly controls about 10% of the mortgage market, suggesting that there's been a major drop-off in interest-only loans. That wouldn't surprise, but because there has been a regulatory clampdown on interest-only loans to reduce their share of the market, And AFG is saying that interest-only loans in 2015 peaked at almost 60% of all loans that were happening at that time, and now they're down to fewer than or less than 20% of home loans sold in the December quarter. So it would appear that that crackdown by APRA has had the desired results. It doesn't mean there are fewer home loans happening. In fact, the latest figures show that the home loan market is still very healthy and at very high levels. It's just that the balance between principal and interest loans have shifted back in the favour of P&I loans and much fewer interest-only loans. At the same time, the ratings agency Moody's has released the latest figures on mortgage delinquencies. So delinquent mortgage is considered to be one where it's more than a month overdue for payment. Only 1.5% of mortgages in Australia are considered to be delinquent loans, which means 98.5% of people with mortgages are paying on time. So those are the major stories that we feature in this week's edition of The Week in Real Estate. It's a free weekly newsletter that we mail out to subscribers. You can get on the mailing list very easily by going to the hotspotting.com.au website and clicking on the link on the homepage. You can sign up very quickly and easily. It's a free newsletter. It's a great way to stay informed very quickly and easily about what's going on in real estate markets around Australia. And finally, the quote of the week, which we feature every week. This one comes from ANZ senior economist Daniel Gradwell, commenting on the level of foreign buyers in Australian real estate. And he is saying that the share of property being sold to foreign buyers has dropped off, especially in the last couple of months. And he attributes that to the stamp duty surcharges in places like New South Wales and Victoria, and the additional tightening to regulation and on the availability of funding. So there has been a clampdown on foreign buying of Australian real estate, both at a federal government level and state government level. The cynical part of me would suggest that it's really a revenue-raising exercise. It's an opportunity, particularly for state governments, to raise extra revenue from the housing market by clamping a stamp duty surcharge on foreign buyers, while pretending that it's a measure to improve housing affordability and make the playing field a little bit more level, so they say, for Australian buyers. I don't think it's really achieved that. What it has achieved is higher revenue for state governments, whilst reducing the amount of supply, because the lack of ability to sell to foreign buyers means that some high-rise apartment projects that might otherwise go ahead won't go ahead. So that's the week in real estate, or otherwise known as The Wire, which we publish at the end of each week. You can get it for free by going to the hotspotting.com.au website. That's all for now. Terry Ryder signing off.